So, today's CPI dropped. Headline prices fell 0.4%. Core was flat. Yeah, they're good numbers. The market instantly cheered, and the US 2-year yield took a dive. But honestly, that CPI print is already in the rearview mirror. What you actually need to be watching right now is the bond market. Look at the long end. On a massive downside inflation surprise, the 30-year yield didn't even give up a full basis point. It stayed pinned at 5.10%. Think about that. Inflation cools, and the big long duration buyers still refuse to show up. The curve steepened because one soft CPI print doesn't fix the structural math. And that math is brutal. The US national debt is closing in on $39 trillion, growing by over $7 billion every single day. We're on pace to cross $40 trillion by October. Nearly half of our spending growth this year isn't even going to projects. It's just paying the interest on the debt we already have. Big buyers are being asked to absorb an endless flood of 30-year bonds. A slightly lower grocery bill this month doesn't change that. And I'll look global, because this is where it gets really broken. Take Japan. A Japanese pension fund looks at a US 30-year at 5.1% and thinks, sure, looks good. But they have to hedge that currency risk back into yen. Once you bake in those front-end hedge costs, that 5.1% yield gets chopped down to a measly 1.9%. Meanwhile, they can just buy a domestic 30-year Japanese government bond and get 3.73% completely risk-free. They literally earn double by just staying home. And here's the part almost nobody clipped. The Fed chair himself was asked about this morning's numbers. Warsh said some people will look at this data and call it mission accomplished, and then quote, "That is not my view. The man setting policy just told you the rearview mirror isn't the road." So here is your actual scoreboard. US 2-year, 4.19%. The short-term traders cheering the CPI. US 30-year, 5.10%. The long-term buyers nowhere to be found. Japan 30-year, 3.73%. Keeping their cash at home. Even the latest TIC data shows foreign governments are net sellers of US assets, dumping nearly $40 billion. So yeah, CPI was good news. But the Fed chair isn't celebrating. And the heavy hitters who actually fund the global monetary system looked at the bigger picture and took a step back. So stop watching the rearview mirror, watch the road. PPI drops tomorrow morning, and the long end will tell you the truth before any headline does. I track this sequence step by step on this channel. The full map is one tap away.